Welcome to This Explainer. Look, if you're a homeowner in San Diego, you already know that maintaining property in Southern California isn't exactly cheap, right? And replacing a roof is, without a doubt, one of the biggest investments you'll ever make in your home. So we're going straight to the facts today. We are cutting through all the noise, skipping the contractor sales pitches, and giving you the honest, no-fluff reality about your roof and your taxes. Because our goal here is simple. We want to make sure you aren't leaving a single dollar on the table.
It's literally the most burning financial question you have right after handing over that massive check to a roofer. You've just spent tens of thousands of dollars. Tax season is looming right around the corner, and you're wondering, can I write off my new roof on my tax return this year to get some of that cash back?
Well, the short answer is no. If this is your primary home in California, you cannot directly write off a standard roof replacement in the year you pay for it. But seriously, don't panic. That is definitely not the end of the story. Because while you can't deduct it today, a new roof can actually save you a ton of money at tax time in a few incredibly lucrative ways that, honestly, most homeowners completely miss. Okay, let's dive into this.
Section 1. The Tax Deduction Myth and Capital Improvements.
So, to really understand your tax savings, we need to translate a little bit of IRS jargon into plain English. The IRS basically looks at the money you spend on your house in two very different ways. It's either a repair or it's a capital improvement. If you've got an active leak and you pay a roofer to patch it up or replace a few missing shingles, the IRS considers that a repair. It just keeps your home in standard working order, and it's strictly a personal expense. But a full roof replacement, that's an entirely different beast. A brand new roof adds serious value to the home and extends the life of the property for decades. Because of that, the IRS categorizes a full replacement as a capital improvement. They view it as a major investment into the physical property itself, not just some simple yearly expense that you get to subtract from your income right now.
And because it's classified as a capital improvement, your roofing money isn't just lost to the tax void. It actually gets parked into something the IRS calls your cost basis. Think of your cost basis as kind of like a master tally of every single dollar you've invested in your home for tax purposes. You might not see the tax benefit on this year's return, but you are absolutely going to see it the day you stick a for sale sign in your front yard.
Section 2. Shrinking your capital gains.
And this brilliantly illustrates exactly how that works. Let's say you bought a house in a neighborhood like Claremont for $600,000. A few years go by, and you sell it for $900,000. Now, without a new roof, your taxable gain sits at $300,000. But if you spent $25,000 on a full roof replacement, that money gets added directly to your original purchase price. That creates a new cost basis of $625,000. So now, when you sell the home for $900,000, your taxable gain actually drops to $275,000. That documented improvement follows the house and literally shrinks the slice of profit the IRS is allowed to tax.
So why does this matter so much for us San Diego homeowners specifically? Well, it's all about the federal exclusion limits. The IRS allows a single filer to exclude up to $250,000 of profit on a primary home sale, and a married couple filing jointly can exclude up to $500,000, assuming you've lived there for 2 of the last 5 years, of course. In the past, a lot of folks didn't even hit those limits, but San Diego home values have absolutely skyrocketed. Long-term owners are routinely seeing profits that smash right past these federal limits. If your profit is above these thresholds, tracking your roof's addition to your cost basis is incredibly relevant because every single dollar you can document as a capital improvement directly reduces the amount of profit you actually have to pay taxes on.
Section 3. Exceptions. Rentals, offices, and wildfires.
Okay, while standard primary residences just park their investment, there are 3 specific edge cases that do trigger an immediate tax effect. First up, if you own a rental or an investment property, let's say a duplex down in Chula Vista or out in El Cajon, you don't write the roof off all at once. Instead, it gets depreciated over 27.5 years, which means you take a slice of the roof's cost as a deduction against your rental income every single year. Second, if you have a legitimate home office that passes the super strict IRS exclusive use test, you can actually depreciate the exact business use percentage of the roof. And finally, the wildfire disaster exception. If a wildfire damages or completely destroys your roof, the unreimbursed portion of that loss might qualify as a casualty loss deduction. But keep in mind, the area has to be a federally declared disaster zone to qualify. Because the IRS tests for all 3 of these exceptions are incredibly strict and honestly highly prone to being flagged, this is exactly where a qualified CPA is worth their weight in gold.
And that last exception carries some really intense reality in our region. As the old firefighting adage goes, a roof is often the first thing an ember finds. In San Diego County's wildfire zones, Understanding what materials actually hold up, like specialized wildfire-resistant ones, and knowing how a federally declared disaster impacts your taxes is absolutely crucial knowledge for protecting both your home and your finances.
Section 4. Credits, rebates, and cash. Now, what's really interesting about this slide is the massive myth floating around out there that a standard roof replacement qualifies for the federal energy-efficient home improvement credit. I'm here to tell you, it does not. That credit covers things like windows or heat pumps, not your standard asphalt or tile. Only very specific electricity-generating solar roofs might qualify for a separate clean energy credit. But here is the amazing reality for San Diego: the SDG&E Cool Roof Rebate. This isn't some complicated tax deduction, it's a rebate that puts direct cash back into your pocket right now, without you even having to touch your tax return.
And here is the kicker. If you are replacing a roof in almost any part of San Diego County, California building codes likely require you to meet Title 24 Cool Roof standards anyway. These standards basically require the use of highly reflective roofing materials. So, since you're legally required to meet these standards in most cases, qualifying for that SDG&E rebate is completely within your reach. Skipping the rebate process just means you're leaving free cash on the table that you're already entitled to. And let's be real, for most of us, a cash rebate today definitely beats a slightly smaller tax bill years from now.
Section 5. The receipts you need to save.
So, the crucial point is this. The absolute moment your roof is finished, the most actionable step you can take is all about the paperwork. You must save these exact documents. Do not, under any circumstances, throw away your contractor's itemized invoice, your proof of payment, or your permit records. These three things are what establish the exact cost and date of your capital improvement. Remember, a roof you paid for back in 2018 still counts toward your cost basis in 2035. Take these documents and store them directly with your original home purchase files. When the day finally comes to sell, you or your accountant will have everything perfectly ready to immediately lower your capital gains tax. So, to wrap this all up, we've covered the reality of the cost basis, those strict exceptions for rentals and wildfires, and we've totally busted that federal tax credit myth. The no-fluff reality is that while you won't get a write-off this year, your new roof is quietly building a powerful tax shield for when you eventually sell your home. But I want to leave you with a much more immediate thought regarding your upcoming roofing project. If you're getting a new roof in San Diego and it has to meet Title 24 standards anyway, are you leaving an SDG&E rebate on the table? Make sure you ask your contractor, grab that cash back, and file those receipts away.